there's very few jobs that there's not opportunities to automate. So I'm not really sure Amazon cares or these other companies cares. I just think they want anyone to quit.
How much of a threat is AI to small businesses?
Oh, it's a huge threat. And that was even before we had this tariff situation that's putting even more pressure on small businesses.
So, George, how can everyday workers and professionals prepare for the inevitable future when we are all replaced by AI?
I think there's really two roads to go down. And I don't think everybody is going to be replaced anytime soon. I'm not like a doomsday person like that, but directionally, that's where we're going.
What skills and knowledge actually matter in a world where AI is doing a lot of the heavy lifting? How much do soft skills and just being able to be personable and likable really matter in today's world?
Yeah, I mean, it always mattered, but even more now. I think you brought up a really good point.
We're stepping high, we're chasing dreams. Selena Hill, setting the scene. Life's a story, let's unfold. Sharing wisdom, tales untold.
Hey fam, and welcome to Over the Hill, the podcast that helps you ascend to new heights in relationships, success, and finance, and equips you to build the life you deserve. I'm your sister in purpose, Selena Hill, and today I'm excited to speak with George Kailas, the founder and CEO of Prospero.Ai, a free investment app that uses AI to provide retail investors with institutional level market analysis. George, thank you so much for joining me today.
Thanks for having me on, Selena.
So, George, you recently published a fascinating article in Fast Company about AI-driven bankruptcy, where you write that, and I quote, Google recently announced that over 25% of its code was written by AI. If some of the most talented engineers in the world at Google can no longer compete with their AI, how much longer do small and medium-sized businesses have before, at the very least, their funding environment becomes more difficult as a result and bankruptcy ensues? So my question for you, George, is how much of a threat is AI to small businesses?
Oh, it's a huge threat. And that was even before we had this tariff situation that's putting even more pressure on small businesses. It's a situation where, we kind of talked about especially what was going on with Amazon in that article. And you've seen it, the way they've put pressure on retailers. And all of that is because, they're automating more, they have the most efficient supply chain. And then the larger they get, the more they can put, pressure on these even smaller businesses that they're buying things from, and they're absorbing a lot of them after they've, sort of put them out of business by, pressuring them downward in prices. And that's really just the first place we've seen it. But I think that's going to be, going around to a lot of other businesses, and just the start. And Amazon kind of had this, idea, because a lot of the kind of mom and pop shops just aren't able to compete with that. And Amazon is kind of, I think, this first wave of these massive AI companies. But the other thing that's going to happen is as AI companies rise up more, I think you won't necessarily even see them grow as big as Amazon got. So that's going to put a lot of pressure on labor, a lot of pressure on small businesses, and it's just getting harder and harder to compete.
Are you saying, George, that no company in the foreseeable future could get to the same magnitude and level as Amazon?
I'm saying something even scarier. I'm saying that maybe they will, but if they do, they won't even be employing the same amount of people.
In your article, you do talk a lot about Amazon and the concept of silent firing. So this is where companies, as you say, like Amazon, are making it so difficult for their employees that they're hoping that they quit, right?
Yeah, so that's actually a really funny story, because I wrote that, and I had just started kind of writing for Fast Company. And when I published it, a few weeks later, the people that I knew at Fast Company were like, well, your article's really doing great. And I kind of was like, oh yeah, sure. I bet you say that to everyone. That's what I said in my mind. And it didn't even occur to me how popular it got until I saw Andy Jassy say something about it, and he didn't even dignify my term, but he did say, I think he called it backdoor layoffs, which is kind of funny because it's much less catchy. But it resonated with so many people. Now there's very few people that I meet that haven't heard that term because everybody knows that it's going on. And it's funny when Andy Jassy commented it, he just kind of like blanket denied it. But there's really no evidence that it isn't true. If you look at, the data that all came out during, COVID, when people started working from home, employee retention was better in work from home. Employee satisfaction was better when work from home. And when they first announced it, I think it was 90% of Amazon employees didn't like it. It was something I think maybe closer to 70% that said they would consider quitting. I'm just quoting those off the top of my head, but I think those were at least close to the numbers. And it's really crazy because when you look at stats like that, Amazon's smart. They're very data driven. There's no way they don't know those numbers. So the only way that it makes sense that they would do that is if they know people would quit. And that's, really how I came up with the term.
So you coined the term silent firing.
I did.
Brilliant. And I know when it came out, everyone was talking about silent quitting, which is the opposite, in which employees and workers sort of detach themselves mentally and emotionally from their work and just start doing less and less, the bare minimum, just to make a paycheck. And a lot of times they're, working on a side hustle, or they're entrepreneurial in some way, or some of them just have other full-time jobs. But you're saying that so companies have gotten wind of that, and instead of paying a severance package and instead of doing layoffs, they're like, let's just make it difficult to get most people to quit. How does somebody know if they are a victim, if you will, of silent firing at their job?
Well, I think the thing is, when you point it to engineering, there's very few jobs that there's not opportunities to automate. So I'm not really sure Amazon cares or these other companies cares. I just think they want anyone to quit. And I mean, the big thing that I think I kind of have a unique take on here that I haven't heard a lot of other people talk about is that I've been studying public companies. I worked at my first hedge fund when I was 17. I actually taught myself accounting to get that job. And I've always been really motivated to create a more fair financial system. And if there's one thing that I've learned in all those years, it's that companies can be predictable in certain ways, and they need to get a return on investment. So if you look at how much money is going into AI right now and has been, and it's going to escalate, the only way to really see a return on an investment at the scale that they need is to lay off people or to get them to quit. They need to reduce headcount. So I would say everyone is in danger. Anyone that's being made to feel at all uncomfortable by the position. It's one of those things that you look at it. If you're a key person in a company and you're just like, well, I'm not going to come in, you might win that standoff, right? But if you say, I'm not going to come in, or I'm not going to, comply with this strategy, and it's made pretty clear that that's not an option for you, then it absolutely is a situation. So you can do little tests like that to figure out, but make no mistake about it, I think everyone is in danger.
So, George, how can everyday workers and professionals prepare for the inevitable future when we are all replaced by AI?
I think there's really two roads to go down. And I don't think everybody is going to be replaced anytime soon. I'm not like a doomsday person like that, but directionally, that's where we're going. There's really two options, I think. One is to go kind of the more engineering route. There's a lot of good, what are called like no code tools, right? And there's a term called vibe coding, where you're really describing to a like a no-code tool, what you want to build. So Google that term, start to learn those tools. That's one path, right? Or you could learn a lot more about how to interact with these engineering departments and these things, making new AI systems, new AI tools, agentic frameworks, things like that, where there's going to be a whole class of people needed that are going to need to, go out and sell these products. So if you understand them, you can sell them, and you don't need to know how to use them, but you do need to understand how they work and what kind of functionality they have. And then there's also like more kind of what you might consider internal systems where, you might have to explain how to use these tools to other people that have, been in your company longer, that might need it, that are, kind of more executives that need help translating in between these new things that are kind of rolling off the pipeline and how they make decisions. But it's here, the spend is there. It's enough, like I'm saying, it's accelerating enough that these companies need to use these tools. They need to use, like, they need to reduce headcount around them. But you won't be one of those people if you at least understand how they work, or even better, learn to use how they work. Because I've been around this for a long time, and it's easier than ever to learn them. Like 10 years ago, I've been in AI for 14 years. 10 years ago, I couldn't even hope to get to a point to use this stuff. But by the pandemic, I actually learned, to code. And that's because it had gotten a lot easier to learn the skills, and a lot more tools and a lot more resources online to accelerate that process. And it is orders of magnitude easier than when I learned now.
Yeah, and I'm so glad that you went in that direction, because that was going to be my next question. Like, what skills and knowledge actually matter in a world where AI is doing a lot of the heavy lifting? How much do soft skills and just being able to be personable and likable really matter in today's world?
Yeah, I mean, it always mattered, but even more now. I think you brought up a really good point where it's like, if X people are on the chopping block and you all do the same thing and you're more likable, you've made more connections in the company, you're not going to be the one, that gets fired. That's kind of an age-old truth. But yes, I think those soft skills are really important. I think of like networking within your own company, because, we can kind of connect the last two thoughts, where if there are certain positions that are going to stay and the decision makers, they could even tip you off to the type of skills that you need to learn, or the type of connections you need to make to be able to do that. And I think, the other thing, that we focus a lot on, and I've kind of seen this path of technology for a long time. And we actually, about 8 years ago, stopped focusing on, trying to say compete with institutions and build competing algorithms, because I figured out we were never going to do that. We focused more on, tracking what institutions were doing, and visualizing them in very simple ways. And I say that because, there's also opportunities to find new companies that are actually focusing on, instead of having the best, most complex technology that can solve all the problems, there's going to be a lot of companies that are focused on explainability. And if you can locate those companies and say, you know what, this company actually has a really easy product to explain. I actually understood it when I visited their website. That is something that is super important. And there was a quote that's going in my next Fast Company article that I got from when I was still in college, Jonathan Rosenberg. He was a senior product executive at Google, and he gave one very simple piece of advice that I always follow, that said, don't worry about, what company you're working at or your role. Focus on riding the right wave and just hopping on it, and the rest will figure itself out. And I think that's something that people can focus on. Look for startups, look for new companies with a product that's really easy to explain and that resonates with you, and you can see a future, and take whatever job you can get at that company.
That's great advice, George. And another thing you write a lot about is some of the negative effects AI is having on the workplace. In addition to replacing a lot of workers, you write about how now companies are so focused on productivity and putting profits over people, and they're just driving a workplace culture that's unsustainable for human beings. Can you talk more about that?
Yeah, I actually think that's the beginnings of what I've been, kind of warning about in other capacities in this talk, which is that people start needing to see an ROI on this investment. So as they're reducing headcount before AI can really do a lot of the heavy lifting that it would need to do, that's creating a situation where they're just pressuring the smaller number of workers. And that's really hard, because not only is it requesting, like, kind of more hours, it's also requesting them to learn new skills and to learn these tools at an accelerated rate from where they might be comfortable, and that's creating a lot of long hours, and that's really the bad part about capitalism that we've been seeing for a long, long time. Where we could see these tools really liberate a lot of people and kind of maybe not cut headcount as much and make everybody's time a little easier. We're instead seeing these companies, I think in a lot of cases, overspend ahead of their ability to use these technologies, the AI systems, and then that gets kind of taken out on the remaining employees, to learn really fast and also to kind of like work the hours that a machine might work because they're always on.
Yeah, to your point, George, some of these companies, as you say, they just have unrealistic expectations for workers when it comes to just the demand, being on call 24/7, answering emails, not having boundaries, working at all hours of the night, and sort of expecting them to keep up with the machine, which is, again, like I said, it's unsustainable. And I think, when these companies have policies that are worked around AI-driven metrics instead of really focusing on the well-being of their workers, in the long term, it's not going to produce a healthy workplace culture or environment. And we still need people to a large capacity. Like we're definitely in the AI job revolution, but you still have to count on humans to make a lot of the decisions. And to continue to push the companies forward. So, if you could just talk about what long-term effects do you think will happen in these workplaces where executives and bosses, supervisors are just so focused on AI metrics and data and just getting things done quicker, faster, and at a higher capacity?
Well, there's a great book called Artificial Intelligence that I'd recommend for everyone. It's actually like relatively old now, but it talked about a lot of these issues. And the point that it really made was that society really needs to start looking at other metrics than something like gross domestic product, right? Because if we measure things by gross domestic product, right, robots are going to be more productive than humans, right? But he recommends something closer to gross national happiness, right? And that's a little like, pie in the sky. I'm not sure America will ever be there. But the point is, I do think it's more realistic at companies. And we need to start having this larger conversation before it's too late, where people start to say, look, we need to measure things outside of production because that's where we're going, right? As long as people only see things in the measure of production, yes, workers are going to be squeezed because the job market is going to get tougher and tougher. People are going to be like, oh my God, I'm so happy to actually have this job as everybody else is getting laid off. And they're going to put up with, worse and worse treatment. So, people need to think about, especially like key employees that can't be lost, need to think about how they are going to kind of demand this for them and the other people around them, because it's the time to do that now. And it should be easy to make that case where it's just like, look, if we don't actually have, there's legal risks, right? People could start, we've seen this in kind of the investment banking world where, people start to, have health problems or drop dead. And then it could be a bigger headache for the company, or people just might not want to work there. So people need to, stand up, start making this more of a reality for companies, because if they don't, it's going to be too late and there's not even going to be enough people, to have that kind of internal revolution at places anymore.
Yep. To your point, the turnover rate will be even higher. You mentioned increased healthcare costs for the company and just diminishing the morale inside of the company. And then, once that reputation spreads, people aren't going to work there, like you said. But another thing that I wanted to bring up is you wrote that we haven't even scratched the surface of the AI adoption curve. When do you foresee the peak of this AI job revolution?
I think we're probably like 5 years away from the peak. And I read a lot about what experts, people that are even much deeper in the code than me say. And, maybe 5 to 10 years is where people are at, but it's just like, it's scary because what the peak looks like is just massive, massive job loss. And I really think that we haven't seen much of a forward-looking view or approach in our government for a long time. So that's why I really think it's got to be handled at the, at the corporate level. And like we're saying, people are going to have to like start demanding that their companies start addressing this, especially after it accelerates. And there's going to be have to be things, I think, some form of better, pensions that people demand, where it's just like, okay, if you're going to lay off, 50% of the workforce by, 5 years from now, like if we're going to keep working, we really need to have some assurance that we're going to be taken care of if we're laid off and not just, 6 weeks pay.
At the end of the article, George, you write that AI will redefine capitalism itself. How so?
I think just like it's what we're saying, right? It's that I think the counter argument that everybody always makes is they said, oh, well, in the Industrial Revolution, there's, no one's going to work again. And we've seen this kind of in like, in later forms of industrial automation and earlier forms of AI when it came. There's been like a big curve in AI in terms of it's going to solve everything and then it can't do anything. But I think the really scary thing here is where we started, where you talk about like these really highly skilled workers now being replaced. And I think that's what we've never seen before. We've kind of seen like assembly line type workers replaced in different ways in different capacities and in a number of times. But I think the revolution is what we're talking about, where it can really come for any job. It can come, one of the things that Amazon, like after I wrote that article, one of the things that came off was that we found out that Amazon was laying off like a lot of managers, right? And managers is something that you can kind of be viewed as kind of uniquely human. Before another role that didn't really get replaced by machines. If anything, a lot of like kind of assembly line workers and you needed still people to manage at a high level. So I think that's the real revolution, and I think that you're just, when you look at the amount of job loss that is coming from this, it's going to really, I don't think some people really realize yet how much, and it's not, the timeline is, kind of vague. Different people have different things, and it might take a bit for, corporations, to really be ready, to do it. But part of it is that there's a lot of these, more efficient startups coming up. So they might not even have the option. Some of these incumbent larger companies, might actually just be replacing kind of the old guard that doesn't actually like choose to be as lean as them. So that's the real revolution, I think, that these like smaller companies, everybody keeps saying we're going to see the first one-person unicorn, $1 billion company coming. And I don't think that's too far away. I think we might only be a year or two away from that. And that is kind of a benchmark where you're saying, okay, it's actually like not just people's jobs that people should be worried about. It could be some of these like even larger companies now that might start to get replaced.
Wow. It's a lot to think about and a lot to unpack. But speaking of startups in the AI world, again, you created Prospero.Ai to democratize access to institutional financial data for retail traders and investors. So I want to talk about that, your AI company. Tell us more about how AI is transforming retail investing.
Well, I mean, it's in so many ways. And, one of the things that we see is, all of these startups coming and saying, oh, we'll invest your money. We have like, we can beat the market, all that stuff. And I think that's kind of the scary side, because what I always tell retail investors is like, you have to be able to make logical sense of something. And it just doesn't make any logical sense to me that that a company that like, even if they've raised as much as $100 million, Bridgewater, Renaissance Technologies, these massive hedge funds could lose $100 million in a day and not bat an eye. So how is this little startup going to compete with them? So all of these AI startups, you have to be able to like rationalize it. I mentioned it a little earlier, but we, a little while ago started to say we don't want to try to beat them. We want to try to visualize what they're doing because they have information that other people just don't have access to. So if we can, show people easy visualizations to, especially what they're doing in the options markets in real time, we can make things a lot easier. And there's other technologies for that, but I would really implore people to look for technologies that made them smarter, not just handing your money over somewhere, because that you'll never learn, that you're not improving yourself. And the other check that I would just make for yourself is like, if you're typing in like, what's the best stock in ChatGPT? You have to ask yourself like, okay, I have this information, but everybody else has it too, or these random tips on the internet. So what we always tell people to learn is learn how to first go in your comfort zone. Know if maybe Vanguard total return is a better ETF for you as you learn, because that'll risk manage for you. But while you're doing that, go on your journey to improve and use different tools like ours, other things that make you smarter, use them together, because still as a human, that's what you can do better. You can grab these more advanced AI tools that are kind of democratizing things, making you smarter, and you using that information is going to make you better. And one kind of tangible example that we had for ourselves is, we have an index level S&P 500 net option sentiment is our most, used metric. And that's for actually people to see what's going on in the options markets, not have knowledge of them. And we actually saw it go to 0 on February 21st and stay there for a long time. And we were telling people this is really bad news. And so we actually were out in front of this. And so there's tools that you can use that could just make you smarter. Like I can see that now I have to know how to rebalance my portfolio to do better. But it's really, really important that you learn. And the one other piece of advice that I would have for you is use what you know. If you work in retail and you can see that your sales are down, it's a good time to say buy an inverse ETF like SCC to be able to say like, okay, I could do that. If you're a doctor and you're really good at kind of saying, oh, I actually know how to look at this clinical trial data and predict them. That's the first lesson in value investing. Use what you know, use these tools to make you smarter, because your education will pay off. Throwing your money at some new AI tool is not going to pay off long term.
So how does Prospero.AI analyze markets? How does it use AI to analyze markets?
So we use it in a lot of different ways. Like the big reason we use AI is we actually just have it, look at the sea of information on the internet and get it to you really fast, what that means for what's going to happen in reference to these signals. And we have 10 different signals. They range as simple as like profitability, which but instead of like an EPS that a lot of people have trouble being like, well, how do I use this? What does it mean? We just have a 0 to 100 rating, and we actually run a lot of economic simulations like hedge funds do. So when you see that 0 to 100 rating, you're actually seeing predicted profitability, which is very useful. And they range as complex to something as like, net option sentiment, as I mentioned. That's us actually just tallying the short-term options bets on all these stocks, and the same kind of thing, whether it's an ETF like S&P 500 or QQQ or a stock, you're just seeing that 0 to 100, basically net in real time. If institutions are betting a lot for a stock, a lot against the stock, and that's the kind of thing that can make you smarter. And we give you these 10 metrics, we make them easier to learn, so you can make smart decisions. And I would say the only other thing than that, a lot of these things, the reason we built it is that a price target is slow. A price target updates, not even once a day, but our metrics update every 3 minutes. So you can go as the markets are moving really fast. You can see our net option sentiment, especially that's kind of our signal that everybody uses the most. You can see it moving and know if you're just like, okay, even if you're a kind of novice investor, oh, wow, this is going down really fast. I should just sell some of my stuff, grab the cash. That's what Warren Buffett does. So yeah, there's a lot of ways to use it, but the big thing that you can use Prospero for is to make you smarter, and If that's a little overwhelming for you, you can check out our newsletter, because what we do is we actually like describe how we use all the signals to make ourselves smarter and build portfolios. So that might be a good start for some people.
George, what trends in the next 3 to 5 years should investors be paying attention to?
I think, kind of on just the market level, I really think the big thing I'm recommending is I don't think like buy and hold strategies will work that well. I just think there's going to be too much volatility, too much uncertainty. And, we're already seeing that this year, but I don't really expect things to get back to normal anytime soon. So that's why I'm recommending education. If you're only a buy and hold investor right now, I would recommend learning how to use inverse ETFs, because that'll be very effective. Or learn to use how to start making more short-term decisions if you have time for that. Not everybody has time for that, but I would really take your education seriously, because especially if you're going to lose your job long-term, the best tool you have is to save your money, learn how to invest and make money investing, maybe even trading. You might have a lot of time on your hands, so it would be good to prepare for that moment. And yeah, the other thing I would recommend, just kind of like on a market level, is, kind of connecting to what I said to jobs earlier, right? If you're out searching for jobs and, relevant to your subject matter expertise, and you just say, this company, this area is really going to take off, I think it has a real future, you should be betting on technologies that you believe in, because those are what people look back on 30 years ago and say, wow, that's how I made my most money. That could be you now.
George, thank you so much for joining us today. The information, the insight that you shared was so valuable. I hope everyone is paying full attention. Make sure that you guys are checking out Prospero.Ai. Again, like George said, the revolution is upon us, and we need to make sure that we are prepared and we are trying to stay at least one step ahead of the game. There are still a lot of options. Investing is one. And there's other things that you can do. Like I said, make sure you're working on those people skills, those soft skills, making sure you're reliable, making sure you're personable and just likable. And I personally believe that you will still have a way to sustain your livelihood and make a living. And just keep paying attention, guys. I know that there's a little curve when it comes to understanding things that are new and walking into a new era of uncertainty. But once we get past that little bump of discomfort and we end up on the other side, we end up over the hill, then we'll find so much prosperity and new things and new discoveries. And I am somebody who always believes and bets on humanity. So you know what? We'll survive this, just like we survived the Industrial Revolution and so many other pivotal moments in our society. We'll get through this as well. Thank you, guys.